The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start the show like we usually do with the German DAX. Folks, we have to pay particular attention to the German DAX. If you'll take a look at this chart that we're watching right now here on Tiger TV, you'll be seeing that we have a perfect A, B, C, D pattern starting in September the 6th and where we are right now on September the 30th. If you'll notice, the AB leg is exactly 7 days down. We rally up to the 78% retracement, 7 days down, an ABCD format coming in exactly at the 382 retracement. And we've already rallied over 200 points in the DAX since last night. So this is very, very important. When you stop and think what they've been faced with this week, with the fact that the Deutsche Bank, their largest bank, is under a great attack, this has held up incredibly well, in my opinion. So you must respect this. And also, if it goes below it, then then the disrespect will come in, and it's going to go a great deal lower. But this is really a bullish pattern. H.M. Gartley said in his book, Profits in the Stock Market from 1937, that the best trade is to buy the first ABCD correction in a new bull market or sell the first ABCD correction in a new bear market. And this is certainly an ABCD correction in perfect. It's just absolutely perfect, and it comes in at the strongest ratio for bullishness, and that's right at the 382. So we need to really focus on that very much. But besides that, we have the new moon coming in at the close of business today, so that'll have some effect. And of course, we have all of these other cycles that start early in October that are related to the Bradley stock market cycle. So all of that is very, very important. If we look at the Deutsche Bank stock, 1 second, please. I just lost it for a second. Get it right back. There we go. If we look at Deutsche Bank on the daily basis, you'll know here that we went down and we've hit and we've tested the 1.618 level again. Now, if you'll notice, over the last 4 days, we had a pretty wide-ranging day. We took out the low of 3 days ago by 2 cents. In other words, we went down and made the exact 61% retracement at 11.08. And from that level, the other low was 11.12. And so we did make a slightly lower low, but it didn't go below it. The key price to me, folks, is $11 a share. This thing looks like it's holding, but whether it's going to hold or not, I don't know. You have all the people, not all the people, but you have the CEO, the chief financial officer from Deutsche Bank coming in, telling everybody how they're going to get through this, and everybody stick together. We're all going to be fine. Well, let me tell you a story about Enron. When I moved here from California, I was fortunate enough to be on the board, the advisory board for Pepperdine University back in the late 90s and early 2000. I had alerted them to the fact that the NASDAQ in 2000 was going to be very, very ominous, and they were able to get out a lot of their stuff and saved many, many millions of dollars. And I stayed with them through 2005. It wasn't, I didn't get paid much, but I got to teach a class on Saturday to about 100 graduate students, and it was just one day a year. But it was a lot of fun. And anyway, we got into this situation with Enron, with Pepperdine, and also with my family physician here in Tucson, who was he was one of the people that his family owned one of the subsidiaries. I believe it was Portland Cement that they had bought out, and everything they had in the family was in Enron. And when I went in to see him, the stock had gone from 95 to 65, and I told him, I said, if it goes below 50, I said, you've got to protect yourself. I said, something's wrong. And he says, well, they're telling us everything is so good. And they kept telling him all the time. The stock would go to 95, 85, 75, 65, 45. He never got out. And of course, it went to zero, and it destroyed his life. He ended up dying very, very young. And in fact, he took his own life. But at what happened at Pepperdine was I kept warning them about this stock. They had $10 million, which is not, and it was a small sum for them because it was a $1 billion, organization. But they had $10 million tied up in Enron, and that was down from $35 million. And so I gave him a presentation that this was not good if this stock of Enron went below $40 a share. At that point, it was the 1.618 expansion. And, of course, it went to 35, usually within one day, I believe. And evidently, I had upset someone on the board because I never got invited back, and it went to zero. But, that's neither here nor there. Okay, just remember that prices are what determines what things are going. It's not the news. And $11 a share is the number you want to watch in Enron, because if Deutsche Bank, because if we get below that, it's going to break some really serious things to the downside. We had a lot of things happening last night. One thing that you have to pay another very close attention to, because we like to watch markets that make slightly higher highs and slightly lower lows, and we did this last night in the NASDAQ. We went down in the middle of the night. It was about 3:30 in the morning New York time, and we made a slightly lower low than we did on the previous day. And as you can see, we've almost matched the rally that we made yesterday, intraday, when we made that big ABCD correction. So we're over a really critical time here in the market, and so we must pay very, very close attention to this, because there's a possibility that we could have another rally to the upside, because the market is, even though it's had some corrections, it is not broken, very much at all. It's just, held up incredibly well. So just remember to watch this thing, because all it takes to turn it really bullish is one really strong day in the stock market. Like, yesterday we were down, 200 points in the Dow. If we were to take all of that back, either today or Monday, that would signal that, yes, we're probably getting ready, to go to the upside in really strong fashion, if that is, what we're going to be looking at. Let's take a look here at we'll look at the Dow E-mini. You'll see pretty much the same thing occurring here, where we had these lower highs. Yesterday's high, of course, was exactly at the 78% retracement. And as you can see, we came down and have tried to make a double bottom down here at that near that 18,000 level in the Dow E-mini. All of these look very similar. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to talk a little bit about the silver and gold right now. Yesterday, we were looking at those as a potential move. As you can see here, we had that head and shoulders pattern in the silver market yesterday down there at 1908. We've gone up now, and we've gone above the 61% retracement here. We've already hit 1973 this morning. So if you happen to be in this silver trade, make sure that you either take partial profits here or raise your stop really, really tight. I would move it at least 15% off the high. That would take you down to about 1957. Very good year, by the way. One of the best Corvettes and Chevrolets they ever made. But 1957 would where I'd put the stop in on the silver market. The gold has not moved nearly as much. We bought the gold at 1325, and I would put that stop at break even. That way you're in a risk-free trade, and if it does move, great. If it doesn't, no harm done. I still believe we got a shot at the old level that we've been talking about for a very long time, and that's at 1275. That's the really long-term ABCD pattern in the gold going back to December, and that would also be a 382 retracement of that $300 and some move that we had to the upside. So just keep in mind that these are just patterns that we're looking at. They have nothing to do with fundamentals. I had an email last night from a gentleman asking me if we incorporate anything with anything related to fundamentals with this. And the answer to that is no, because fundamentals are lagging the market. Pattern recognition is actually, leading the market. So that's one of the reasons why I use it, because I don't understand the supply demand of it. I have a master's degree in business, but I still don't understand the supply demand. I tried that back in the 60s and early 70s, but it was always, lagging at the, it has to be the most bullish at the top, and it has to be the most bearish at the bottom. That's the primary function of price, is determine, whether prices are too low or too high. And that's what technical analysis tries to do, is to put you on the right side of that. It don't always do it, but it does it quite a bit of the time. Now, one of the other ones that we need to pay close attention to, and it had a tremendous move already this morning, and that is the Canadian dollar. As you recall, we were watching this three-drive pattern to a top, and I wanted to show you we had this. Just give me 1 second so I can get it up here. There we go. You'll notice here we did have a beautiful three-drive pattern going from June through July and into September. The time is just nearly spot on. The ABCD pattern up at the 132.50 level. Then what happened yesterday is we rallied back up to the 78% retracement, and we've since dropped almost 100, over 100 pips, which is a little over $1,000 in just a matter of a few hours. We're probably going to be testing the 130 level in the Canadian dollar. Now that'll have some effect, on the crude oil market. And the crude oil market, is, someone's asked a question. The DAX futures are very close to a three-drive to a down pattern. Bill, Mr. Bill, you're right. In fact, I believe I have that DAX on the shorter time frame, but frankly, I wanted to get this. I don't know if I do have it or not. I wanted to focus on the daily because it was. Yep, I do have it, I believe. Yes, here it is. Let's just take a look at the DAX here on the 30-minute chart, which we usually do. You'll see that we are having that three-drive to a bottom pattern. We've hit the actual price here on the long-term daily here. So this is what's really important. The 382 was hit. That was the real key level. You have to really pay attention to this DAX index, folks, and particularly because the fact that we've been bombarded about how bad Deutsche Bank is, and the chart's saying that it's bad too, but it's not below $11 a share yet. So that's telling me that there's a lot of support at this 1.618 level. So I would be I just can't be really bearish. I'm bearish, but I can't be super bearish until it gets below, that 111, and then I'll have a better chance to look at it. Okay, let's get back to some of the things that we like to do here at TFNN, and that is to try to get lucky once in a while and pick up a blind hog's acorn as he's going through the old pasture. All right, we got a chance here, folks, to take a look at something here in the old yellow corn. We have a head and shoulders pattern forming very similar to the one that we had in silver. Now remember, some patterns work, some patterns don't, so you have to protect yourself. But you'll notice we do have a head and shoulders pattern. This does not have the perfect symmetry that we had in the silver. In silver, the distance between the shoulder and the head and the shoulder were absolutely perfect. What we do have, however, is we have the corn coming in to this 61% retracement down here at this 13.25 a bushel level, which should give us some pretty strong support. At that point, you become a farmer. You don't have to own the farm. You don't have to lease the farm. You don't have to buy the equipment, hire anybody, buy any seed, go to the bank. All you have to buy is a December contract of corn, and you're going to own 190 acres of the finest corn money can buy in either Indiana, Iowa, or Illinois, and then you're going to see if it's going to go up or not. The risk here would be around $500. So from 13.25 to 13, excuse me, I've got gold on my mind. 325 to 315 would be your total risk on this, which would be $500, which is acceptable because this market moves in increments of $500 to $1,000 very, very quickly when it goes. So it does have a great deal of potential if it starts to go. You have one other thing that is very important, and that is that we are over a new moon. And this happens to be the harvest moon. So we have to pay close attention to it because of that. And this will be very interesting. It's called the harvest moon because the moon is so close because of proximity to the Earth, because of the autumn equinox and stuff. It makes it just like a giant, spotlights out there in the old fields of Indiana and Iowa, unless you have cloud cover and stuff, which in Indiana, they're having a lot of rain right now. Okay, someone's asked a question if I see anything in the soybean meal. Actually, I do not. The beans are trying to make a bottom. Oil looks, oil has been very, very strong, but I'll post the oil after the break. But frankly, I don't see anything. The one that looks the best to me on the patterns, and I've looked at wheat, corn, and beans, it's spot on. We were going to have Rich Anderson on today, but he's at the Ryder's Cup in Minneapolis, and he's having a really great time, and he's unable to come on here, and we'll be able to see it. You'll be able to watch it, but we'll see. Now, the harvest moon is the full moon, folks. That's the one that was, you'll have the harvest moon comes in 13 days. That comes in on October the 13th. 13th and 14th will be the harvest moon. That's going to be the brightest moon of the one. Of course, we have the new moon will come in again on Halloween, but the harvest moon is actually on the middle of the month in October. So we will watch this very closely. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, folks, we have some great news. I believe we have Rich Anderson on the line. Rich, are you there? Well, I thought we did. Okay, let's not worry about that. I posted the chart of the, he's having a good time, so let's not worry about that. I posted the chart of the soybean oil. As you can see here, soybean oil has been in a much, much stronger trend than any of the other things. Remember, oil is the cooking oil. This is the one that they use for it's all your margarine that you use. It's also your, the cooking oil. It's also the paint that we use. Soybean oil is really one of the premier oils for oil-based paint. Now, we had a question about the oil. We also had a question about the meal. Now, the meal is the one that really looks interesting, folks. Take a look at this meal chart. This is really a beautiful chart because it shows us that we are setting right at a 78% retracement of the whole move from February up into June. And as you can see, June was an exact 61% retracement of the high from 2014. You can't even see it on this chart because of the fact that it goes back a little bit too far. But now we pulled right back to the 78% retracement. And if you were to draw a 20-man line on this, it would be very, very close to where we are. Well, no, it's a little bit lower, so that doesn't quite work as well as I thought. But there's a lot of support here at 298 in the meal. And so watch this very, very closely here. We have also a little 3-drive pattern on the daily on the meal that looks really interesting. Boy, that does look interesting. Hold on. Let's just do this together and have a little bit of fun here because this is what I like to do. Let's just draw this in, and then I'll show you. What I'm doing now is I am talking and trying to do two things at once, which is not an easy task. But I'm drawing in the patterns so that we can see. Oh, this is a buy. Wow. Let's take a look here. Let me push this up. Pull this up so we can take a look at it here. Then you'll see here. This is a really interesting pattern here in the meal, folks. We have the 78.6 on the daily pattern. And there we go. This is what I want to show you here. All I've done now is I've blown up the chart so we can see what's happening over the last few days. I know Mr. Z will pay attention to this, but you can see here we've had a nice little butterfly pattern also form here at this 295. Boy, you can actually buy meal here for about $3 a ton. That's only a $300 risk, folks. So. I would really kind of look at that. Now, whether that's going to be the same as corn, I don't know. And you shouldn't do both. If you're going to do meal or do corn, pick one. Don't do both, because if you do both, you double leverage yourself. That's great when they both work, but it's not great when they both fail. So, try to just pick the one that you like the best. Actually, they're equal as far as patterns, but the corn has a little less risk than the meal. But this should be, we should be bottoming here in the meal. We'll follow up with this on the, we have a USDA report today, Mr. Z. I wasn't even aware of that. That's probably why I had Rich on, or scheduled Rich on. Yes, that's correct. So that'll also affect all of this stuff, but that's another thing you got to worry about. But the patterns are there. The reports will either work or they won't. So that's what I'm seeing in the corn, and we'll see if the meal's doing the same thing. We'll follow through with the meal and also the beans next week, after we have the report out of the way. So let's just move on and take care of some of the other things that we have to look at here today. We're having some more strength in the stock market. It's a little bit. The Japanese yen. Let's just get to that one. I wanted to show you. We've been talking about the Japanese yen quite a bit, the support that it had at the par level. We've had a pretty good rally off of that. What I wanted to do was to give you an idea of what the rally looked like here in this Japanese yen, so that when we see it, you'll notice that that's not the one I wanted. I wanted the other one, which is right here. There's the one I want to see. This is the one that's up to date. You'll notice that all we've done in the Japanese yen coming off that bottom for the last 6 days is just go up, make lower highs again, like we've done, and they also came in at exactly 61% retracement. So the yen dollar is still heading to the downside. We need to get this above the 102.30 level, and then you would have a valid breakout and you'd be able to see if that's going to, get above that. Then it would certainly be a spot to get it turned around. But those are the ones that, from the currency standpoint. The other one that was interesting in the currencies was the euro last night. You'll notice here, this is one I sent out to the 24/7 group. We were looking for a low to come in at 111.57. The low came in at 111.55. We've rallied $700 in the last hour and a half. So that has completed it's already rallied to the 61% retracement of that whole move down yesterday, which is telling us that there's something really important here at 111.57 in the British, or in the euro. If we take a look at the dollar index, you're going to see the exact same thing, only a little bit differently. This is the daily, and this is showing you this. If you'll look at this tight triangle that we're in with the U.S. dollar, folks, this is what's happening. We're getting ready to come out of here very, very strongly. Now, on the bullish side, we've had higher bottoms. You'll see the 135 pattern. But on the bearish pattern, you'll notice that we had 5 ratios coming together at the same time. That is very, very unusual and has very, very bearish implications. The reason for that is, if you'll notice those 2 highs that we made in August and then early September, both of those were just 61% retracements, and we couldn't get above those levels. So anything below 94.80 in the dollar index would send this thing to the downside with a real weakening of the U.S. dollar, which would not be good for commodities. Usually that's the case, but not always. Anyway, that's what we're watching, and I'm just looking at numbers. That's all we're looking at. Fortunately, the foreign exchange numbers follow so beautifully that it's just really amazing that gives you such beautiful symmetry in some of these things. Let's take a quick look now at what we've got going on here. We had a rally up to the 2158 level, which is the very important level in the E-mini S&P. If we get above 2165, that's going to change the mood to the upside, I believe. Let's see, we've got crude oil has bounced back and almost attempting now. Crude oil, let me give you, let's just do that right now, because that's really an important one. I wanted to do that when we started the show, but I had to do the DAX. We had so many things happening last night that I couldn't do them all. Okay, let's take a look here. There we go. All right, you can see here that we have the ABCD pattern forming. On the upside, we had one on the downside, but we missed the price objective by 20 pips. Didn't get there. But last night we had a perfect ABCD pattern to the upside. You'll notice that we did make a higher high from September 8th, and now we are in the midst of a correction, heading back up.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, I have to share this chart with you. This is the chart of Wynn Casinos. We sold this for the 24/7 service up at the 109 level. Yesterday, I put an order in, as you can see, a buy stop at 102.62 to protect a $6.50 profit in this stock because it had that multiple bottoms in here. So I got stopped out right after the opening yesterday, only to see it gap down $7 today. So then they wonder why Prozac is such an important product in the world. Anyway, that happens. Nothing else you can do about it. But when you see this, it just makes you shake your head and say, oh dear. But anyway, someday it's good, someday it's bad. You just never know. One day it's chicken salad, the next day it is chicken soup. You have to just be careful. We have, as a matter of fact, we have 7 positions remaining in the 24/7. All are profitable, but we've got our stops, right near break even on everything, so we're protected no matter what. But these things do happen. There's nothing else you can really do to do that. Someone's asked a question about the euro because they were watching the charts that I sent out. This thing has really moved, $700 in your favor here. I would just move your stop up by 20 pips and let it ride. You don't know, that would protect a $500 profit in it. So I would suggest that is what you were doing. Now, if you're in the Canadian dollar, that one is even starting to drop more precipitously than the euro's going up. So that one has moved well over $1,200 to the downside. So we'll see. The one that's troubling is the long gold, because we bought the gold at $13.25. We've been up to $13.31, but silver went up to the just a little above the 61% retracement and couldn't get above it, and gold could barely take out the overnight high by only 20 cents. That's usually not very good, but again, you can't try to outguess these things, and so the only thing you can really do is to put your stop in. And, just don't hope for the best or pray for the best. Just think of the best, because if you think good thoughts, most of the time they're going to be working in your favor. So these are the things that you have to pay attention to as we come in to a Friday. We have a very big group of cycles coming in at the beginning of the week. If you remember, and we will cover this in the newsletter, and I'll also cover it on the show on Monday about the Bradley model. We're right in this level of really strong cycles coming together here in early October. And September was supposed to be a cruel month. It's down, but hardly very, very cruel at all. I think the most important chart that I've seen this week is what I've seen in the DAX index. If the DAX index were the S&P or the Dow, I would be flat out buying those things because that's an ABCD in a bull market. And, you just want to be, I happen to be short some things with my stops, very, very tight. So that's going to protect profit. But that's a very, very scary profit from the what you call it, from the Gartley standpoint at a 382. It's just very, very bullish in that DAX. And if you notice here, we've already given up $5 in gold here in the last few minutes. This is going to end up being a break-even trade. It looks like, because of the fact that we could not get above that previous overnight high by more than 10 cents, which was a bad sign, especially when silver had moved $1,000. That is just not very good price action, because gold should be leading and it's not. There's been some discussion here in the Tiger Den today about the 1275 level in gold, and I still think we could make that easily. It's just one of those things that gives us it's very similar to what that DAX chart looks like, only a little bit longer term, of course. But yeah, this gold is going to be toast in just about a few seconds. But anyway, it's a break-even trade, not a big deal. But the one thing that we've got to remember here is, as we come into Monday, things are going to be changing here, folks, on a cycle basis. Either the Bradley model is going to flip over and invert, or we made a major bottom last night in the markets a day early. And so this is what we'll find out, because if they explode out of here, either today on the up more than 200 points in the Dow, then that will tell us that we most probably got another leg going to the upside, because we didn't get much to the downside, and we're not getting any help, from the bonds or anything like that, because bonds are still, had a little bit of a 10-day rally, but they've gone nowhere. So that's it. So we're out of the gold at the break-even level. You can't move around that quickly, but there's nothing else you can do. It should have gone higher once it took out that 1231 level, but when you're on the air, you can't really do a whole lot. But it's break even, so we'll see if that's going to be the right thing to do or not. But when you don't lose, that's always the right thing to do. So just because you have a stop in and you get out of break even, that's also a winning trade. Also, having no position is a good position. So those are also important. Regarding the crude oil, if crude oil can get above the 48.50 level, that's going to confirm that we're most probably heading up to that $51 a barrel in the crude oil also. There's a really strong probability if we can do that. So those are just a couple that we're watching through here. We've got just 1 second here. I wanted to check the price of the corn, because I don't hear the beeper going off, so I don't think it's been there. Oh, it missed us by ½ cent. Well, if you're looking for corn, wait and see, because we still should get to that level. Wow, I missed it by ½ cent. Anyway, just keep your order working in the corn. It's still early, and you don't have to risk very much if you put that in there. So they're just patterns, folks. It's just like a bus going by. Keep a couple extra quarters, and there'll be a new bus coming by, and there's always another trade coming along, especially if you trade foreign exchange. Foreign exchange gives you, so just for instance, today, the Japanese yen, the Canadian dollar, the euro, and we didn't even do the pound, and it was also another good one. But there were three really good opportunities in the yen and the Canadian dollar and the euro that were just, really spot on. Now, realize that these are done on a shorter time frame, usually on a 4-hour or hourly chart, but they're very, very, very substantial moves. You're talking about a move equivalent to, 15 handles in the S&P, and we had a move bigger than that the last couple of days, but ordinarily you don't get a 15 handle move in the S&P. So these currencies are really the place to be looking at, and they follow the number sequences of the Fibonacci summation series better than anything that I've ever seen. They all work pretty good, but nothing like it in the currencies, because that's real money. That's the biggest emotion of all, because everybody has a fondness for money. If not, what it'll do is what it'll spend, but those are the things that we want to keep an eye on. Okay, one question someone had about the price of Walt Disney. I think it's in a bottoming process here. It's been weaker than the rest of the market, but frankly, I don't see a great deal to do with that right now. When we started the week, switching gears here a little bit, when we started the week, we were looking at the Dow Jones Utilities. Give me 1 second here. I keep hitting the wrong button, and that always is a problem. There we go. We were looking at the utility index. We've already come down, and we've reached the 78% retracement on the downside of this from Monday. We're way down into the 666 level. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted the chart of the Dow Jones Utilities. Now, this is related to interest rates, of course. You'll notice that we hit that 61% retracement last week, and now we've come all the way down, and we've made the 78% retracement of the last move. Now, if you look at this closely, this has a potential to be a head and shoulders pattern. So this could have some interesting points of interest if we hold this level. We won't know until, of course, Monday what happens here. Of course, this fails, then you're looking at, much more to the downside, which the ABCD structure would take it down another, 10% from where we are right now. But right now you do have this head and shoulders. The problem with this is that you had this big move down with long-ranging bars that usually suggest that we're going to make even lower lows. But there is that potential of the head and shoulders. One of the folks in the den have asked me the question is, how do you select which pattern is going to work? Folks, you can't select. What you have to do is to find a pattern that you feel comfortable with, and then you to stick with it. Like if you sold the Gartley pattern on the upside, you have to stick with this. You can't be thinking about a potential head and shoulders bottom in here. I bring that to your attention because someone looked at the chart and say, is that a head and shoulders? And the answer is yes, it is a head and shoulders. The problem that you have is that you're looking at something that could have a larger pattern within the pattern. And so that would take us down another 10% from where we are right now. The real, like I mentioned at the beginning of this show, that ABCD pattern in the DAX at exactly 382 level from the low 3 months ago, that means something because the AB leg was perfectly symmetrical in time and in price to the CD leg, and it came in exactly at 0.382. That's the definition of a Gartley. So if the DAX starts to get strong, and it's already up 200 points off the bottom, then you're looking at something really significant. And when you stop and add that fact that Deutsche Bank has gotten about as much news negative as Apple did positive, you got to be careful. Have every day an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.